Most taxpayers have completely missed this change in the New Income Tax Act 2025, and if you use presumptive taxation, this one provision could significantly affect your tax planning. Let's understand this carefully. Under the Old Income Tax Act 1961, presumptive taxation was covered under different sections. Section 44AD for businesses, Section 44ADA for professionals, and Section 44AE for transporters. But under the New Income Tax Act 2025, these provisions have now been consolidated into a single section, Section 58. At first glance, this looks like a simple restructuring exercise, but subsection 4 of Section 58 is now becoming a major discussion point among tax professionals. The wording of Section 58.4 broadly suggests that losses, allowances, or deductions under other provisions of the Act may not be allowed against presumptive income. Now, this is important because under the earlier framework, taxpayers could generally claim certain adjustments and deductions while computing their total taxable income. But if Section 58.4 is interpreted strictly, some of those benefits could potentially become restricted. For example, there are concerns that business losses from another source may not be adjustable against presumptive income. House property laws, such as interest on a self-occupied home loan, could also potentially face restrictions in set-off. And even certain deductions under the new Chapter 8 provisions, which earlier existed under Chapter 6A, may become a matter of interpretation. Now, to be very clear, these implications are still being analyzed by professionals. There is currently no final judicial interpretation or detailed clarification available on this provision. But the wording has definitely raised important questions, and this leads to a larger discussion. If presumptive taxpayers eventually lose access to multiple deductions and adjustments, then many taxpayers may start comparing whether the new tax regime becomes more beneficial due to lower slab rates. Some professionals believe this drafting may indirectly encourage migration toward the new regime structure, but that is still a matter of interpretation and policy analysis. The new Income Tax Act 2025 is going to change many long-standing tax concepts, and Section 58 is definitely one provision that businesses, professionals, and tax practitioners should closely watch. As more clarifications and practical interpretations emerge, the actual impact will become clearer. If you want simplified breakdowns of the New Income Tax Act 2025 tax planning and important finance updates, follow CA Lens, and don't forget to like, share, and subscribe